Welcome back. I'm Jim Wade, founder of Top Floor Insurance. Once again, we're filming from the ATV building, the Atlanta Tech Village building, which is a really cool building. Look it up on Google. It's where the future headquarters of Top Floor will be as soon as they've finished renovating the building. Today, in our previous videos, we've talked about property, we've talked about liability, we've talked about umbrella, pricing that goes into all of those. Today, we're going to talk about builder's risk insurance, which is something that you buy when you're building an apartment community or when you're doing a major renovation to an apartment community. So if you're not planning any of those anytime soon, you can turn this one off. But I think there's some major mistakes that people make when they're buying builder's risk insurance. So let's just take a brand new project. A lot of people will negotiate with a general contractor and allow the general contractor to buy the builder's risk policy for them. Sort of a turnkey operation. Hey, you do everything. I got to say, I think as a developer or an owner, you're making a big mistake there. Here's the first reason why. They're in control of the policy, and they're going to get the proceeds from all the money in the event of a claim. So let's just talk about it. It's a $10 million project. You're halfway through, so you've got $5 million of materials and labor into the project and some overhead, and you have a major windstorm or a fire, and it's a $2 million claim. Now, at the time, you're arguing with the contractor a little bit. There's a little friction, as there often is, and your control you have is withholding money, right? In this case, $2 million claim, the contractor, since the policy is in their name, collects the $2 million of your money, is now holding $2 million of your cash. They're suddenly in control. I just think it's a real bad idea to allow that to happen. Put the builder's risk policy in your name as a developer or the owner. Okay, the second thing, if you allow the general contractor to negotiate your builder's risk policy, there's a number of things that they generally leave out. First of all, they only cover their costs. They don't cover all the overhead and costs that you have in the project. They just cover their costs. So the project is going to be underinsured. Second of all, there are two things that go into builder's risk coverage. There's hard costs, which is actually the cost of construction, labor and materials. And then there are soft costs, which come into play in the event of a claim, so in the event of a fire, in the event of somehow the project has an insurable loss and it's delayed. And the soft costs are, what extra expenses do you incur while this project's being delayed? You've got interest on the construction loan, and what revenues are you losing? You were supposed to open up and have revenues after 18 months. You've had a major loss, a $2 million loss. Now instead of 18 months, the project's going on for 22 months. Where's that additional revenue that you've lost, and where are you recouping the extra expenses that you're incurring? That's generally not covered in a contractor's builder's risk policy. My advice is, buy it yourself and have somebody that understands how to structure it and put it together for you. If you have any questions, as always, feel free to call me, Jim Wade. At Top Floor, all we do is provide better apartment community insurance, period.